Okay, let's get right into it. We've all thought about it, right? How can I legally lower my tax bill? I mean, it's a question as old as taxes themselves. But what happens when a perfectly legal method gets twisted into a massive, multi-crore criminal scheme? Well, that is exactly what we're unpacking today. It's a story of fake political parties, cash getting passed around, and the one tiny digital mistake that brought the whole thing crashing down.
It really is the million-rupee question, isn't it? And look, there are plenty of legit ways. Investments, retirement funds, you name it. But one of the most direct methods, one that offers a full 100% deduction, is making political donations. And it's this exact rule that became the perfect cover for a nationwide scam.
So, at the very heart of this story is one specific law, Section 80 GGC of the Income Tax Act. It's actually super straightforward. If you donate money to a registered political party, you can deduct that entire amount from your taxable income. Simple, totally legal, and it's meant to encourage political participation. But, in the wrong hands, this simple rule became a huge tool for fraud.
Now let's break down how this whole thing actually worked. Because this wasn't just a case of fudging a few numbers here and there. Oh no, this was a sophisticated operation with multiple layers, all designed to look completely legit on paper while secretly funneling money right back to the taxpayers, all for a nice little fee, of course.
Here's the four-step circle of fraud. It's kind of genius in a criminal way. First, a taxpayer wires, say 1 lakh rupees, to a political party that only exists on paper, a ghost party. Then, that ghost party issues a very official-looking donation receipt. The taxpayer uses this receipt to claim the full 1 lakh deduction, often getting a big tax refund. And here's the kicker. The ghost party then gives the original 1 lakh rupees right back to the taxpayer in cash after taking their cut. It's a perfect round trip for laundering money.
So, there were 3 key players that made this all happen. First, you had the taxpayer, usually a salaried employee just looking to save some money on their taxes. Then you had the facilitator. This is the middleman, often a tax professional or an accountant who sets the whole thing up. And finally, the most important piece of the puzzle, the ghost party. These are what's officially known as Registered Unrecognized Political Parties, or RUPs. They're registered with the Election Commission, but they never actually contest elections. Their real business was this scam.
And, of course, everybody got paid. The ghost party would keep a pretty small commission, somewhere between 1.5 and 3.5%, just for processing the dirty money. But the real money, that went to the facilitator, the middleman. They would charge anywhere from 5 to 10% of the donation amount, or sometimes a wild 50% of the total tax the client saved. It was a seriously profitable business built entirely on lies.
For years, this scheme was running like a well-oiled machine, pulling in hundreds of taxpayers and crores of rupees. But the entire network, this whole house of cards, was brought down by one single, tiny, digital clue that investigators just happened to spot. It's a classic story of criminals getting too comfortable.
This right here, this is the digital breadcrumb. An email address. That's it. Investigators started noticing that dozens and dozens of completely unrelated tax returns, all claiming this specific tax deduction, were all filed using this one single email address. It was the one loose thread that, once they pulled it, unraveled the whole thing.
And just look at the scale we're talking about. In just 3 years, this one email was tied to over 115 different tax returns, claiming nearly 2.6 crore rupees in fake deductions. It was so obvious this wasn't a coincidence. This was the work of one single facilitator managing a huge network of clients. The digital footprint was just undeniable.
So who was behind that email? Well, investigators traced it back to 2 brothers, Sinister Mr. X and Sinister Mr. Y. They were partners at an accounting firm called Sinister Mr. X & Co. They weren't just part of the scheme, they were the architects. They were the masterminds who ran the whole show for all their clients.
With that digital trail leading straight to their front door, the Income Tax Department launched a full-scale raid. This wasn't about what was on their computers anymore. It was time to see what physical evidence was hiding inside that office.
The whole operation was fast and it was thorough. It all started on July 14, 2025. Teams hit the firm's office and both of the brothers' homes at the exact same time. For 3 straight days, they went through every single file, every drawer, every room, looking for the physical proof they needed to back up that digital trail.
And oh, they found what they were looking for.
The first big piece of evidence was cold, hard cash. 3 lakh rupees, just sitting there in the office, with absolutely no explanation for where it came from. This was the physical proof of all those off-the-books cash deals.
But that cash, that was just the beginning. They found an absolute treasure trove of evidence. We're talking 11 diaries, 8 different registers, hundreds of loose papers, 3 hard drives packed with data, and get this, signed checks made out to the exact ghost political party they were investigating. The fraudsters had literally kept detailed records of all their crimes.
And deep inside those diaries, investigators found the smoking gun. They discovered these handwritten ledgers. On one side, client names, and right next to them, cash payments, cleverly disguised as GST fees. This was cash that was never, ever declared on the firm's official books. It was undeniable proof of a secret, cash-based operation.
And if all that physical evidence wasn't enough, the clients started talking. Under questioning, taxpayers involved in the scheme started confessing. This statement right here confirms everything. It was the firm that filed the returns, and the commission for their illegal work was paid entirely in cash. The case was now completely airtight.
Okay, so with all the evidence collected and confessions on the record, it was time for the investigators to do the math and figure out just how big this operation really was. And trust me, the final numbers are pretty staggering.
Data pulled from those seized hard drives showed a very clear trend. This scheme was growing fast. I mean, from around 20 lakh rupees in fake donations one year to over 51 lakhs the very next year. This was no small-time thing. It was a rapidly expanding criminal enterprise. The grand total came to over 1.3 crore rupees. That's the amount of money that was laundered through the scheme, all passed off as legit political donations and all run by a single accounting firm.
And what was the firm's cut for masterminding this whole fraud? Almost 4 lakh rupees in pure, untaxed cash commission. This was their profit. This was the motive that fueled the entire operation.
So did crime pay? Well, not in the end. The consequences were serious for everyone involved. The taxpayers? They had to repay all the tax they dodged plus hefty penalties. The accounting firm? They're facing massive financial penalties and possible prosecution. And the ghost political party? It's now facing a huge tax bill on over 1.3 crore of income it never declared, and it's on a list to be shut down for good.
You know, this whole case is just such a powerful reminder. A huge, complex fraud that involved millions of rupees was ultimately brought down by one common email address that was just used one too many times. It really makes you wonder, in our world that's becoming more digital by the second, what tiny, seemingly insignificant piece of data is going to be the clue that unravels the next big crime?